Silver short squeeze has just begun, and it's worse than first reported. So before we get into the video, I just wanted to share that I've been recording this video over the last couple of days as I've been gathering bits of information, and it's further from our previous video about what's happening in the silver market with the speculators and the banks and COMEX and the LBMA, etc. And so you'll see in a second where I talk about silver's price. That was before the US CPI numbers came out, which we know silver went down. But what I believe is a good sign is that silver did not go down as much as the stock market. So one would have thought that the liquidity coming out of the financial markets, that would have actually hit silver quite hard, but it didn't. Yes, silver went down, but not as much as the stock market. So for mine, that is a really good sign. And it's a good sign when taken into account what's happening between the bullion banks and the speculators. And also what's interesting is what's happening on the COMEX for both silver and now gold. So you can see that the silver market yesterday was up almost 6%. And that's off the back of people seeing what's happening in the silver market, between the battle between the speculators shorting SLV and the commercial banks that have gone long or net long for the second time in history. And, well, we've got an update because things are actually worse in the silver market than we actually thought. And when I mean worse for the speculators, those shorting the SLV. So in the last video, I said that there was 51 million SLV short interest positions. Well, actually, it's now 60 million as of August 31st, which represents 12% of all outstanding shares. So if the silver and SLV prices continue higher, we're going to see some serious short squeeze fireworks happen here. But not just that. In my last video, I said that the cost was 4.6%, up from 0.18%, but now it's gone up from 4.6% to 5.3%. So, those that are holding all those short positions, their cost to borrow those SLV shares are now 5.3%. So, yeah, I can really see something big happening. So you got the commercial banks that are net long, or you got speculators, their borrowing costs are skyrocketing to try to short this thing. And if the price continues to go up, well, they're going to have to unwind a lot of these short positions. Do you guys remember what happened to nickel? This is what happened to nickel. This is what we call a short squeeze, when, well, people get squeezed and stopped out of their positions and actually have to go back into the market and buy. So, as Keith Weiner said, they believe that it was time to take a bet on silver. We did too, just seeing what was happening in the market. But, well, as you can see, things are actually getting worse for the speculators. And speaking of Keith Weiner, he tweeted this: I said in the Monetary Metals Supply and Demand Report that there was a real scarcity in silver. Regular readers know that I have not often been this bullish on the silver price. I also discussed this with Jay Taylor Media on his show last week, and today, voila. And from Rob Keats, London silver inventories continue to plummet as metal exits the LBMA vaults. Relentless hemorrhaging of one of the world's largest stockpiles of silver is now well and truly underway. So here's just a chart of a tiny segment of the SLV short transactions. And the question is the carnage for the SLV shorts just beginning? Well, I think it is, but whether it is or not, I think we're about to see some fireworks happen. And you can see that
as of the 6th of September, these short transactions are down to nearly $60,000. And here we've got the COMEX Gold Daily Change Moving Average with the 50-day, 100-day, and 200-day moving average. And as you can see, the 100 and 200-day moving average rates of gold withdrawal have never been as high as they are now, and they're continuing to increase. So I think there's some big players that understand the fiat currency system that we've been under is coming to an end. We've got an almighty debt bubble at the household, corporate, and sovereign level. Interest rates are rising. This isn't going to end well. And so there's big players that know that gold is the ultimate safe haven with no counterparty risk. And, I think precious metals investors have been waiting for a while. They've been a bit disappointed, a bit frustrated, but we've seen what's been going on behind the scenes. And I think, as I've said on this channel for a long time, I think we're in an inflationary decade ahead. And Zoltan Pozar says that we're seeing Bretton Woods 3.0 right before our very eyes, yet we in the West just want to blindly close our eyes thinking that the US dollar will remain the global reserve currency and that all of us can continue with our fiat currency system. And I talk about the 40-year bond bull market being over. Well, I think people understand gold. Smart people understand gold and gold's role throughout history as a monetary metal. Here's a chart of Chinese gold imports, and you can see that the last time China bought this much gold or imported this much gold, the gold bullion spot price was $1,300 an ounce in late spring 2018. So this could be a good sign. And here's just another chart of Chinese gold imports and exports. So you can see very clearly that Chinese gold imports are rising back to levels seen in 2018. And, well, we know what the price of gold did from 2018 through to now. So I want to finish this video with this quote from Alan Greenspan. In the absence of the gold standard, there is no way to protect savings from confiscation through inflation. There is no safe store of value. If there were, the government would have to make its holding illegal, as was done in the case of gold. Deficit spending is simply a scheme for the confiscation of wealth. Gold stands in the way of this insidious process. It stands as a protector of property rights. And if one grasps this, one has no difficulty in understanding the status antagonism toward the gold standard. And that was Alan Greenspan before he became chairman of the Federal Reserve. However, apparently, according to Judy Shelton, his friend Judy Shelton, he still holds this view. Anyway, guys, if you like this video, please hit that like button. Really do appreciate it. Love to see your thoughts and opinions in the comments below. Take care, everyone. I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.